Good afternoon and welcome to NYFP. Today I'm joined by Alan Valdes of DME Securities. Hi Alan, thanks for joining me on this Friday afternoon.
Remy, thanks for having me.
Well, U.S. stocks are higher following Bernanke's speech. He did not introduce any stimulus measures. So in the short term, what do you expect to see in equities?
Well, you know, I'm actually a little surprised because right after Bernanke's speech, and he didn't give us any sugar, the market came in about 150 points. But, you know, the market, I think, was baked in that he wasn't going to give us. It was like a 5% chance that he was going to give us a QE3 anyway. And I think the GDP number today at 1%, even though very weak, better than some people were thinking it could possibly be. So I think that's what you're seeing. And also, remember, it's the last day of trading for traders because we have a 3-day settlement. So it's the last day of the month. You're seeing some guys just get into the market just to mark up some stocks. That goes on also today.
And Alan, since next week is September, we will be getting that big jobs report at the end of the week. What do you expect to see in that report?
Not good. I think that's the problem with the economy going forward. You know, what's good for American business isn't necessarily good for the American economy. So to take Walmart, for example. Walmart they beat the expectation and they had double-digit gains, but outside, internationally, domestically, they were flat. So I think you're going to see that, and that doesn't create jobs, and that's the problem, that there's a structural change going on where we may be stuck, as they say, the new norm with high unemployment above 5% for quite a while.
And since you mentioned overseas markets, I do want to get your take on what we're seeing in the Eurozone. That short sell ban that was supposed to expire today will be extended. And we also saw a sharp fall in the DAX yesterday. But overall, none of the sovereign debt issues have been resolved in the Eurozone. So how concerned do you remain?
Well, you know, very concerned. And you bring up a good point. Even though there's a short tick rule now going on, they can trade around it. So you see them trading in the DAC. The DAC's been down big. That's been the leader. So essentially, they can short the DAC, even though they can't short financials. And that's the way around the short tick rule, especially in Europe. But we are concerned because now you look at Finland having questions about how they're going to fund Greece. And it could wind up being another kick the can down the road and nothing gets settled. And that's the biggest drag because remember, Europe is one of our biggest exporters that we export to, so we need them as much as they need us, and that's the problem going forward. If they get into a recession, which it's very, very iffy right now, they could fall into recession. That's the problem.
Okay, Alan, well, thank you so much for weighing in on these topics, and have a great weekend.
Thanks, Remy. You too. Be safe out there.